Well, this is still the most hated V-shaped rally. And it, of course, has a lot to do with when stocks fell in a waterfall decline into April. Nobody likes to be sitting on stocks. So a lot of folks liquidated at the lows. But we know that whenever the VIX is above 60 and falls below 30, you've made a decisive low. And now visibility is better. Tariffs aren't as bad as we expected. And the inflation impact actually has been very muted. And actually, outside of tariffs, underlining inflation's actually much lower than people expected. And I think the Fed is, even if they're holding now, the bond market doesn't believe it. If you look at the 2-year, they think the Fed's 2 cuts behind. The 10-year is now down to 4.2, which means the Fed can be more dovish in the next 12 months, and that's a tailwind for stock.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. Tom Lee dives into Bitcoin and crypto trends, market insights, and bold predictions. Stick around, this is one you can't miss.
Where you still look at your year-end target is at 6,600 still? So that's up about 8% from where we closed on Friday?
Yeah, I think that the reason people don't think there's more upside, I think there's upside to 6,600 because the PE of the market can go up a lot. We already had 5 shocks. We had the COVID shock, the supply chain shock, the inflation shock, the Fed fastest hikes in history, and then we had the tariff shock. So 5 shocks in 5 years.
5 years, yeah.
And earnings kept growing. If this was like a stock, we'd say, look, if you tried to kill it 5 times and it still grew earnings, we would put a much higher multiple on it.
Jim Chanos was talking on Bloomberg the other day and said that what we're seeing right now in AI reminds him of a lot of ways in the dot-com bubble. Now, the numbers and the earnings are very different, but he was talking about the Ciscos and the Lucents and some of those companies that were selling the things to shore up the internet. And I think he's looking at all of the CapEx spending that's taking place and saying it's great for right now, but it could change drastically and relatively quickly too.
Yeah. I was a tech analyst during that time. I think it's very different. We have to remember the internet boom was companies like Yahoo creating web pages that were raising venture capital funds to create web pages. So the purchase of the equipment was based on like creating web pages. Right. AI has use cases like replacing workers. So you have true dollars for a company to measure how much they're saving. And so until we get to the point where AI doesn't save you any money,
right,
then it's a bubble, but
because
maybe it's undervalued.
There are use cases right now, and it's not just about selling to the consumer and getting people to pay you to basically give stuff to the consumer for free.
That's right. And it's almost like magic is happening, right? ChatGPT, people have remarkable experiences. Some of these people are using it as a therapist. Nobody in the early internet days was saying the web pages worked great everywhere. It was actually, people were just building web pages to nowhere.
If it's true, though, that it can actually replace worker hours or worker jobs, is there a point that you worry about what happens to the economy if people lose their jobs en masse? There was one of the AI CEOs who said he could see unemployment going from 4.2% to 20%.
Yeah, there's going to be huge distributional consequences. This is like, instead of China of the 80s, this is like another species replacing human workers, right? Robots. So I think that's a societal question where, what do we earn wages for? Because if it's for output, this PhD worker that may be also like a 300-pound robot that could do anything is going to be a better worker than us. And so I do think it's important for us to really create a new benchmark for what is achievement and what we should be focused on. And it could have a positive outcome. We could be focused on, betterment of society.
Yeah, I guess that comes down to it. There are some people who are advocating for a 4-day work week, which is interesting.
Yeah.
But traditionally, if companies are finding ways to to spend on this. They want to save the money, not just redistribute it to the workers.
That's right. There may be few. So we may have retirement age at age 39 now. But then if robots are producing food, we won't have food shortages, right?
Right. Tom, thank you.
Thank you.
A great optimist, always.
Bitcoin is once again grabbing attention, with bold predictions setting the stage for a possible surge to $200,000 by the end of 2025. This comes as on-chain data reveals that around 98% of Bitcoin's supply is currently in profit, a figure that reflects strong bullish sentiment, but also raises the risk of short-term corrections. Historically, such high profitability levels tend to precede market volatility, as more holders may be tempted to cash out, leading to sudden price drops. A similar situation unfolded earlier this year, when Bitcoin dipped from $109,000 to $74,000 after profitability reached 98.8%. Recent data from Glassnode shows Bitcoin's realized profit/loss ratio has spiked by 156%, from 1.1 to 2.8, exceeding caution levels and highlighting the mixed emotions in the market, confidence with a dash of fear. Analysts suggest that while institutional interest and accumulation are growing, the rally's sustainability depends on continuous demand and overall market confidence. Experts like Stock Mini Lizards believe Bitcoin is close to breaking out of a long-term price channel, setting near-term targets of $140,000 and potentially $200,000 by year-end. Others, like Mags and Sina from 21st Capital, echo these targets, with forecasts ranging from $130,000 to $250,000, depending on macro trends and technical indicators. The next Bitcoin move could be explosive.
Can you explain how we have this big, beautiful bill, which people are saying $3.3 trillion added to our deficits and everything else, and yet you're looking at the 10-year coming down?
Yes. It shows you that markets don't view the U.S.'s debt sustainability purely as its budget. Because I think there's a lot of hidden value on the U.S. balance sheet, from natural resources to buildings they own to the value of gold is undervalued. And in a way, when people say the U.S. can't find buyers of its treasuries, it's actually finding it. It's going to be stablecoins. Stablecoins are going to replace any foreign holder of treasuries because
Is that a temporary situation? Like once you do that to a certain level, then sort of living in its own universe?
True. It depends. I mean, stable coins are 250 billion today. The total circulating supply of dollars is in the, nearly 10 trillion. So stable coins can grow. A lot of stable coins transactions happen outside the U.S. So dollar dominance could actually be much higher in a stable coin world. But the main thing is it's at 4.2% the 10-year. And I think that means the bond market isn't as concerned. I mean,
right, but we thought that the bond vigilantes were going to say, no mas, we're not doing this.
Yes. I think the bond vigilantes are essentially correct. The U.S. should not be running a deficit like this. But for whatever reason, we're not at the levels yet where debt sustainability is a question.
Could that change? I mean, it's weird when these sentiment changes come. They usually come without warning.
That's right. Bond markets run on confidence. So there may be a moment where the bond market loses confidence. As long as the dollar is...
Jamie Dimon's worried about that.
Yeah, and you should pay heed to Jamie Dimon because he has his finger on the whole economy.
Michael Saylor just dropped a massive announcement that's got the Bitcoin world buzzing. His company Strategy posted an incredible quarterly gain of 41,407 BTC, worth a jaw-dropping $4.4 billion. Saylor took to his X account to share the news, highlighting a 7.8% return in Bitcoin for Q2 of 2025. This explosive performance is yet another sign of Strategy's aggressive and unwavering commitment to Bitcoin as its core asset. But Saylor didn't stop there. Just a day earlier, he revealed that Strategy had scooped up an additional 4,980 BTC, valued at over $500 million, bringing the company's total holdings to a staggering 597,325 BTC, worth nearly $64 billion at current prices. For the year so far, Strategy's Bitcoin yield has climbed to 19.7%, making it one of the most formidable BTC holders in the world. And it's not just Strategy going all in. Japanese firm Metaplanet continues to follow Saylor's lead, announcing the purchase of another 1,005 BTC this week. Their goal: to build a 210,000 BTC treasury by 2027. Both companies are fueling their Bitcoin acquisitions by issuing securities to raise funds. Saylor's bold move is sending a clear message. Institutions aren't just interested in Bitcoin, they're stacking it fast, and the momentum is only growing. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.